Hello, Lucian Valancourt here with Native Son Realty right here in sunny Jacksonville, Florida, with the latest real estate market trends report for Northeast Florida. So stay tuned. You know, one of the most frequently asked questions I get is, how's the real estate market? The answer I usually give is, the market's great. And that answer, believe it or not, is always true. Here's why. You see, if the home values are going up and you're a homeowner, then you would say the market is great because your investment is paying off, and if you're selling your home, you'll get top dollar when you sell it. Conversely, if home values are declining and you are a buyer, then the market is great because you can get more house for your money and have more leverage when negotiating your final sale price. So what it really boils down to is whether it's a seller's market or a buyer's market. So let's look at where we are today. This chart shows a 2-year history of home sales and inventory. We can use this chart to determine market conditions and trends. Let's focus on active listings and inventory to see if we are in a buyer's or seller's market. What determines whether we are in a seller's or buyer's market? Simply stated, it's a matter of inventory. When there is more than a 6-month supply of homes available for sale, the market would tend to favor buyers. When there is less than 5 months of inventory, the market would tend to favor sellers. When there is between 5 to 6 months of inventory, the market is considered balanced, where neither buyer nor seller would have the upper hand when negotiating prices. You may also look at inventory as an element of supply and demand. The law of supply and demand dictates that if the supply of homes decreases without a corresponding decrease in demand, then home values will increase. If supply increases or outpaces demand, then home values will fall. Based on this chart, we can see that in June, there were 8,737 homes available for sale, and that 2,441 homes were sold. The inventory, also known as absorption rate, is calculated by dividing the number of homes available by the number of homes sold. In this case, 8,737 divided by 2,441 would equal 3.58 months of inventory. This means we're in a seller's market because there is less than 5 months of inventory. We can also use this chart to determine trends. Recognizing that the market is seasonal, we must do a year-over-year comparison or compare June 2015 with June 2016 to see a trend. With 3.84 months of inventory in June 2015 and 3.58 months of inventory in June in 2016, we can see that the market has moved even further into seller's market territory compared to a year ago. We can also forecast a short-term seasonal trend by looking at inventory in June and July of 2015. Typically, inventory levels drop to their lowest levels in June and begin to creep up during the second half of the year. Again, because of seasonal fluctuations, we can expect a similar increase this year. Applying the 2.6% increase in inventory from June to July 2015 to the June 2016 inventory, we can forecast the July 2016 inventory to be approximately 3.95 months. Okay, we covered the supply side of the market. So what drives demand? Well, there are far too many things that influence buyer demand to cover here, but certainly the interest rate on home loans is a major factor since the vast majority of home purchases are financed. Most people look at affordability in terms of monthly payment. A higher interest rate means a higher monthly payment, making homes less affordable. Monthly payment is also what lenders use to calculate debt-to-income ratios when qualifying buyers and determining maximum loan amounts. Here is a 1-year chart showing the mortgage rate trending lower over the last year. You can see that just a 0.5% increase in the mortgage rate increases the monthly payment by $43.24 per month, and the overall cost to borrow by $15,566 over the life of the loan. Mortgage rates tend to cause an inverse reaction in home prices. Lower rates usually produce rising home prices since more people can qualify for loans, which in turn increases demand for homes. Let's see where prices are compared to this time last year. Here is a year-over-year chart comparing June 2016 to June 2015. By looking at the sold volume, average price, and median price, we can see that values are up in all three metrics. Let's look at them one at a time. Sold volume represents the total dollar value of all homes sold, which is up by 4%, even though the number of homes sold was nearly the same this year compared to last year. Average sale price is the total dollar value of all sales divided by the number of sales. This figure increased by 4%. Median sale price is the middle sale price of closed sales. This value increased by 7%. The median sale price is the most accurate metric to use for measuring home values because it removes outliers and is less affected by large deviations in the data. One other metric to look at is the list price to sale price ratio, which shows the difference between seller's list price and eventual sale price. As you can see, last year sellers were getting 97% of their list price, compared to 98% this year. If the market continues to trend further into seller's market territory, you can expect this to increase as well. So, to summarize, we are currently in a seller's market where prices are trending higher and inventory is dropping. This means that for sellers, the time is right for placing your home on the market and getting it sold for top dollar in the least amount of time. For buyers, you can expect competition from other buyers vying for that same home, and you should also expect to pay close to list price when making an offer to purchase. There is some good news for buyers though, and that is that mortgage rates are near historic lows. With these low rates and no major change expected in market conditions in the near future, now is also a great time for you to get in the market and invest in your own home. So, if you're in the market to sell your home or a buyer looking to invest in a home of your own, please give me a call at 904-994-0493 or email me at lucian@nativesunrealty.com and we'll get started right away. Thanks for watching, and be sure to come back next month for my July Market Trends Report. Till then, this is Lucian Valancourt with Native Sun Realty, helping you find your place in the sun.